Hi, welcome back to another installment of the ETF.com video series here at Inside ETFs in Hollywood, Florida. My guest right now is Todd Rosenbluth, Director of Research of ETF and Mutual Funds at CFRA. Welcome, Todd.
Thanks to be with you, Drew.
Todd, you're just coming off a panel on the best new ETFs of 2017. Give me a little flavor of that panel. One, let's start out. What was your favorite?
Yeah, so each of us that were part of it got to contribute one idea, and then somebody then responded to it. So the ETF that I brought forward was from Davis. It's a Davis Select Worldwide ETF. DWLD is the ticker. We like this fund because it's a basket of stocks that actively managed approach that we find those stocks to be attractive. It's a global portfolio, so it has U.S. exposure as well as emerging market exposure, China and South Africa in particular. That manager's done very well in the mutual fund wrapper beforehand. And we think for an active strategy, it's well positioned to do well. And it was one of the audience's favorite picks, but it was not the winner, unfortunately.
What were some of the other choices?
Yeah, so we had a mixture of products that were more plain vanilla. So we saw 3 different investment-grade corporate bond ETFs. 2017 was very popular for investment-grade corporate bond launches from iShares, from Goldman in particular. And those resonated well with investors. And then there was the winning ETF, which Matt Hogan pitched on. The ticker is BUY.
And what does that fund do?
Yeah, so that is an approach looking at companies that would look well from a private equity perspective.
Gotcha.
So as Matt highlighted, these are small cap companies or small cap value companies that have historically in this methodology performed well in an index approach, and now there's an ETF wrapper. The challenge for advisors and investors that are thinking about this is it's the only thing like it, and so it does charge a premium price. It's 95 basis points, which is at the high end of what we'd find for most ETFs that's out there, but it's unique, and that resonated very well with the audience.
Well, who's the issuer for bond? I think it's United States Commodity
Yeah,
Funds?
That's who it is. So
Okay.
It's a firm that's more familiar with advisors from a commodity perspective.
Right.
This is one of their equity products. They have 2 of them that have come to marketplace. But what we find really exciting is that the industry continues to evolve. New products have come about, a lot of great products, and the way that we do research on them from a bottom-up perspective at CFRA lends itself well to that perspective.
We've seen a couple new launches this year on the innovative side, on the alternative side.
Yeah.
We've seen a marijuana ETF, and last week we saw 2 blockchain ETFs launch. Are you seeing sort of a pattern of more innovative, more alternative launches, and has all the low-hanging fruit been picked?
I don't think that's true. I think there's still room to go. One, because there's products that will be unique that people haven't thought of in the ETF wrapper. That ETF in private equity didn't exist until that product came about. But there were also, when there's success in the industry, the asset managers do a very good job of offering a separate version of it. So we saw Robo and BOTZ as a perfect example. Thematic ETFs was very popular, not only from gathering assets in 2017, but with some of the bigger winners were these thematic nature-oriented ETFs. That's going to encourage asset managers to launch more thematic ETFs and an ETF wrapper.
What are you looking forward to this year in terms of new launches? Anything you've heard about that has you excited or interested or even afraid?
Yeah, well, we're excited that we're going to see 2 of the industry leaders there offering actively managed strategies. So Vanguard has filed and is coming out soon, or has gotten approval to launch active factor-based strategies tied to certain investment approaches, value being one of them, quality being another, that has had success outside the United States. Vanguard in an actively managed ETF is really going to drive that home. We also saw iShares do a filing of sector strategies with more of a quantitative approach to it than the traditional GIC side of it. And when Vanguard and iShares enter the ETF marketplace with something new, it's likely to gather assets. Their brand is very strong and they tend to price things competitively.
We continue to see a strong flow of new launches, but we're also seeing a flow of closures. What do you make of that? It's almost getting, for every new launch, there's a closure, it seems.
Yeah, I think that's very healthy for the industry. What we find is that products are going to come out based on what the asset manager thinks is going to resonate, and either it costs too much and it doesn't get in the investor mindset, or the sentiment doesn't work there. And so it's healthy for them to close products that don't gather assets, put their focus of resources and investor attention and marketing towards something new. And they learn from it, and we've seen iShares, we've seen State Street, among other smaller players, close products, and then they have something new that comes out that gathers assets. So that's healthy to us at CFRA.
So finally wrapping it up here, we've already seen some 35 billion in new assets just this year in the few weeks of January. What's really behind that after coming off a record year of some 480 billion?
So I think it's a continuation. We've seen investors increasingly embrace the ETF wrapper. In 2017, they largely embraced the lower cost ETF wrapper, but we've seen other products gather success. I think we're going to see success in fixed income in 2018 as Fed continues to raise interest rates. Investors are going to focus on that lower expense ratio product that's out there. And we think international investing, which was popular in 17, is going to gather steam as well in 2018.
Todd, thanks for your time. I hope you're enjoying the conference. And for our audience, check out ETF.com for our Inside ETF video series. Thank you.